bullseye. Welcome back to Frank Abdo's YouTube channel, where winning with your investments is what this channel is all about. I'm incensed today. Why? Because Apple got hit for no good reason on Friday. But being incensed has its advantages. We're going to take advantage of that, and we're going to make a lot of money as Apple recovers. And we're going to do that with a very inexpensive trade, and that trade will more than double your money. I'm going to demonstrate that to you on the computer here in just a minute. I want you to keep in mind that Apple blew through their earnings estimates. They raised their revenue projections. It's doing phenomenal. Apple will return to its all-time highs here in the very near future. And in order to capitalize on that very inexpensively, we're going to do an option trade that gives us that chance to do so. So over to the computer I go, and I will demonstrate exactly how that happens. Here we are at the computer to do the option trade on Apple. Apple is currently trading at $312.28, and the option trade that we're going to execute is going to, and here's the option chain, by the way, all the options that are traded on Apple. We're going to go out to June, the 19 June 20s. We're going to click on that, open up that option chain, scroll up a little bit so you can see it a little bit better. And we're going to buy a 320 strike in that month of 19 June 20. We're going to pay 17.25 for it, but we're going to execute a vertical on this. That means we're going to sell a call against it. We're going to sell the 330 call against it. So we're going to come over here and we're going to sell it right there. And we're going to, that means we bought one and sold one. And the difference in cost to us is going to be $3.95. Okay, so here's what the trade looks like. It's called a vertical because we bought one, we sold one. And we're not going to do 10 contracts. 10 contracts represents 1,000 shares because options are traded in 100 lot increments. So we're going to drop that down to one option or 100 shares. We're going to buy 100 shares that we have the right to call at 320, and we're going to sell 100 shares that somebody has the right to call 100 shares from us at 330. The profit on this is going to be demonstrated by, first off, we come up here and we can see that the most we can sell it for is $10. But we had a cost, as you can see here, of $4, and we're going to lock that trade just so that we don't get sideways with them charging us more than the $4 we're willing to pay. So always lock the trade, critical, lock the trade. We can sell this for a maximum of $10. It costs us $4. We have a profit of $6. And if I divide the $6 by the 4, that gives us 150% profit on this Apple trade. That's a great trade. Look at it this way. Apple shares, in order to make 150% profit on it, would have to go from $311 times 150%, would have to go up to $466 in the same time period. So the options give us a much greater chance of doubling our money than the shares do. At this point, just to recap, we're buying one lot or 100 shares. We're paying, and the strike on that is 320. And then we're selling the 330. We have a out-of-pocket cost of $4. We hit the confirm and send, and off it goes into the world of option trades where it will be executed. That's it for now. Thanks for listening. Subscribe and click on the bell so you don't miss the next episode of Frank Abdo Winning with Your Stock Investments.